Hi, this is David Friedman. I'm host of TCA Crossroads, where entrepreneurs and investors connect. And I'm with my co-host, Dave Burkus, Chairman Emeritus of TCA Venture Group. How are you, David?
I am doing fine, David, and we're going to do a good job today.
I
So
agree.
let's introduce the topic if we can. And this one's going to feature you, whether you are ready for this or not. And we're going to talk about the difficulties that angel investors have in being able to, first of all, do diligence, to figure out the valuation, to figure whether an investment is appropriate. And we see so many deals. I think you remember from a time we talked in one of the past Crossroads, I'd seen 10,000. I expected that TCA has seen more than 10,000 deals in its lifetime. Which ones do you want to invest in and why? And how do you figure that out? So I'm going to put you on the spot today, David. I'm going to make you tell us how you do that and some of the ways, some of them scientific and some of them just dartboard, how you get that done. So let's talk first about key issues and go from there. And I'm going to hand it over to you and I'll just interrupt you when I think I should.
Yeah, well, it just so happens I have a presentation, but it's really short and it's only key points that we can talk about, and then we can have a good dialogue. But it's aimed at investors, but I think it's also aimed at the entrepreneur because the entrepreneur has to also participate in the framework that I put together. And this kind of makes sense. And it comes out of my corporate background as well as being involved in small businesses. And of course, I made mistakes. I hate to admit it, but I did make a few mistakaks, especially early on in my
No,
investment days. Yeah, I never kept, I didn't pick every winner. In fact, my
I
first
never
couple were
had
really,
I never had a bad deal. Every deal I ever did was a good deal
yeah.
until,
Well,
of
that's
course,
why I
you
have
let it
you as my
mature.
co-host now. Yeah, I want to learn from you.
Yeah,
But
right.
I remember my first deal was, and I led the deal, was with a company that competed with Simply Safe, and they did a great job on crowdfunding. And I realized that that crowdfunding was superb. We thought, me included, being a marketing kind of person, that that was a good proxy for the market. Unfortunately, for a variety of reasons, it turned out to be the entire market that they were able to get. And I learned my lesson after doing a postmortem that there's got to be a better way. And then I started figuring out a way to adopt the thinking that we had when I was in the corporate world of risk and impact analysis and how it could really apply to startups. So I think it's a very valuable, very expensive learning lesson for me, frankly.
So those who are
So,
listening and watching this particular podcast should get some real value out of this because David is about to give you the scientific method. And ordinarily, we don't use the very scientific method. And I'd be very anxious to hear that. So, David, throw a slide up and let's talk about your key issues and how you get this done.
all right. So the key issues for an investor, just to put things in context, we always want to find new routes to revenue. Are you a WD-40 single product type of company, or do you have multiple ways you're going to generate revenue? Recognizing the more routes to revenue up to a point, you wind up with having at least some slough, some back, some other way. If one revenue does not work out, then you have another backup plan of attack instead of saying, my God, what do I do now?
That's a
The
big
second
one
issue
because
is,
I often hear about the one trick pony, and I'm always afraid of that. So I think you captured that one beautifully.
all right, so speaking of the customer now, because customers are really the key to our success, right? So who are your initial targets? We have heard, I'm sure you have, and I'm sure everyone else listening has heard or has said as an entrepreneur, we have all these customers, I have millions of customers, all these different segments. The question is, where do you want to focus? What are your initial target customers? And then how do you start with the target customer with that focus and then blend in adjacencies to near end or additional target markets? So you start in maybe the aerospace market, and then you go to another industrial market. You start in the government, then you go to commercial. You start in B2B, then you go to B2C. So it's very interesting, and there's some risks and impacts associated with each one.
So I like to teach total available market, which nobody could ever reach, the serviceable available market, which you might be able to reach if you had all the resources, and the serviceable obtainable market, which is what you're talking about to start with. And so if
Correct.
the people understand that they're going to tell us the three things and therefore what they think they can obtain, they might be able to get 25% of the sum, but they might only get 1/10 of 1% of the TAM. And so
Yeah,
go right ahead.
that
Give
becomes
us the
its own
tipping point.
issue. Yeah. Yeah, so that's an important part. And again, it's funny because we look at it as static, but each year, because market conditions, technology, and other things we'll talk about change, the TAM, SAM, and SOM may actually change for that year and for a 5-year forecast.
Very right. And most entrepreneurs like to tell us about the TAM and expect that that's the only thing they're going to tell us. And we're not going to ask a question. We're a little smarter than that.
Yeah, if I can only get $1 for each Chinese person I'm selling this to, have a very large company. That's another
Funny you mention
problem.
that because I've used the Chinese glove syndrome. If I could only sell one glove to every person in China, I would be rich. I don't need to sell two.
Yeah, because I've been there, and I've been on. Both of us have been on that side of receiving those things. So the next common key issue is the financial and the market metrics. We want to understand how you're going to measure success. What is your churn? What is your cost per addition? What is your ticket size? When are you going to go to cash flow break even? How are you going to get there? What are the issues facing that? The
And those
next
are all
area.
very I
I'm
was going to
sorry.
stop you for a second just to say that there
Go
are
ahead.
very few entrepreneurs that present to us that have a command of that financial data, that they can say it offhand. So it's a good test of an entrepreneur that understands his or her
Yeah.
business, that they can answer
Uh,
these questions.
And then from the perspective of an investor, we come up with a consensus method to score the opportunities because not all of these issues, customers, market size, financials, IP, business model, exit potential, ask, CEO and the plan are all the same. So we score things differently, and each of us has a different risk profile. My risk profile is very different than yours for a variety of reasons. And especially new investors have a very different profile because they don't have the portfolio to diversify enough now, unless you have a lot of money and you want to throw money at every business out there. So we have to understand how we score it and recognize the investors are all different. This is very important, not only for us as investors to understand, but the entrepreneur needs to understand their customer being the investor. Want to comment on that?
Yeah, I do, because in a future edition of Crossroads, we're going to go deeply into valuation methods and how entrepreneurs and angels vary in the way they do that, and how many of them are meant to de-risk rather than try and predict revenue. And so we'll leave that for a future time, but that is a gigantic issue.
Yeah, so now that was a good segue to the last bullet, and that is understanding risk and impact. And how do we do this? So I'm going to go share with you on the next slide a model. And the model it's an acronym. I didn't invent it, so I'm being very open and honest. It's
Oh,
called PESTEL. And it's like eating an elephant one bite at a time. So I want to find what are my risks and what's the impact on the business. Now, you need to do this not only if you're an entrepreneur, because this is the way you manage a business. You want to be able to look at your business from a variety of angles and make sure you optimize and sub-optimize each category. But also the investor should work with the entrepreneur when they're going through due diligence or when they're involved on the board or on their advisory council. They should look at these and a priori determine where the risks are. So let me just break them down and then we can talk about it for a second. So there are 6 areas. Recognize each of the for each of the letters of the PESTEL. Political, is there a political risk? If I'm investing in Argentina versus Brazil versus Uganda versus somewhere else, what is the risk politically? Okay. Number 2, What is the environmental risk? Because everything is environmental now. Am I creating carbon footprints all over the place? Am I going to wind up somewhere down the line, and it's on here as well, with or legal or regulatory issues because of the environmental things that are coming out? The third one is societal changes. We looked at what happened in society with the closure due to COVID. We look at where social media is going. We look at privacy. We look at hacking. Those are societal issues. Do they affect us? For example, if I'm developing a financial product or program or business, I need to take into account preserving the privacy of the individual, perhaps because of HIPAA, or I need to make sure that my database is secure. I may need multi-factor authentication, a variety of different hacking problems. I have ransomware. So there are a lot of societal issues, which lead us into technology, which kind of creates more societal issues. We're seeing that right now. Remember, Elon Musk was talking about what are the societal issues because of what AI can possibly do. And is there another technology that's going to supplant that technology which the startup is now investing in?
Big one. Mm-hmm.
Okay. And then finally, the last two, economic. If I'm doing business overseas, I have to be very clearly aware of, the monetary policies. I need to know what tariffs are coming out. I need to understand the unique unit economics of my own business and how they can change because of supply chain issues. And then finally, legal and regulatory, especially in the United States and in Europe. When you have privacy laws in Europe, you have privacy laws here, you have a whole legal framework, and the legal framework can change. Certain things make sense. We just had the Inflation Reduction Act. How does that affect the business? What happens if that was pulled back? And that may change your whole perspective. What if you find out that the regulatory climate has now changed such that lithium batteries that are produced in the United States will cost less than lithium batteries coming from China? And what's the effect on your cost? So these are the PESTEL items. You want to make a comment?
Before we go beyond PESTEL, the first thing I thought about was cannabis. I don't invest in cannabis. I would not. But look at that. That has political, environmental, societal, and economic and legal issues all involved in whether or not you're willing to make a cannabis investment. The U.S. laws say no.
It's also technological because it depends on the compound you want to put into the cannabis.
Now, see, I never got that deeply into it because I've just stayed away from it. But yeah. So the point is, California law is different than the U.S.
Somebody
law.
gave me
Okay.
That's it goes back to the political. So anyway,
right.
So let me go through a framework.
Please.
So I'm going to go through a framework right now and see how that one works. Okay. So here's the framework, and it's a very easy framework. Nothing magical. It's a 9-box, and it has red, yellow, and theoretically that's green. Not really great with my colors today. But fundamentally, I look at risk and I classify them as low, medium, or high risk. That's on the vertical. I look at impact on the horizontal, low, medium, and high. If I were to look at all these different 6 items or others, and it could be a variety of things that the executive team of the startup look at and or the investor looks at, because some investors have seen problems, like I've seen problems with crowdfunding, for example, whether or not that's the market, the start of a market or not. And you now take a look at those items and you place them on this framework. They're not really precise, but in this case, there are 6 risks, R1 through R6. See, I'm now getting back to my engineering days. So my parents would be very gratified to know that 7 years of education will actually work out that I can actually do this, But there are 6 risks identified in the chart. So questions on this so far?
No, I'm a little concerned about why red on the upper right. Usually in these kinds of charts, it's green on the upper right. So tell me what that means. Low risk, low impact, I get.
Yeah, I'm a lefty, so left side is good, right side is bad. That's all. I just did it in reverse. It's just I'm just a lefty. I can't tell. I mean, it's the only logical reason. You can change it around The one thing that will be common is down the diagonal, it will still be yellow. It doesn't make a difference which way you pose it.
And that's why we're not all engineers, David. So you're excused.
Okay, well, thank you. I just wanted to validate my engineering background. So I'm going to go into the next slide, which is really, there's 2 more slides, very simple. I'm not going to go in depth. I'm willing to share these. If anyone wants to get these slides, just send me a note through the podcast. I'll send them out, when it's on YouTube or Apple or Spotify. And what we do, it's a little hard to see, is we actually codify what the risk is. So each of these 6 elements will be codified in terms of a risk. Maybe a risk of channels of distribution. It may be, how do we handle the risk of supply chain, having a supply chain that gets choked, or delayed, or or maybe single supplier. How do we deal with that risk? Or how do we deal with the risk of only having one customer? What's our backup plan? Or the risk of losing a key employee that may be so critical. Even with key man insurance, you still have the risk of trying to replace that person. So what you do is you take this risk, this framework, and you lay out the risks, and you know where the risk starts. For example, R5 is the highest risk, high impact. The question now, and this is the critical part, and it's on the next slide, and we can talk. It's laying out what you have to do, or what considerations you have to make, what strategies you employ, what tactics you employ to move that risk to a lower level risk element. So for example, in this case, you're able to move R5 down 1 level. You can reduce the risk. You still have a high impact. You want to focus on those things in red, but the goal is to get the reds to yellow at least, or to green, and then the yellows to the green. And you do this by thinking a priori what the elements are, what you can do as possible amelioration programs to reduce those risks, and work with your team. You create the plan, you put them into place, and then you can continually, in your operations reviews, continue to look at the risks, look at the impact, and try to refine the programs to make those risks reduced and the impact reduced. And that, to me, is very critical. It also helps you, when you do this, to build the relationship with the executive team, between the executive team of the startup and the investor. Makes it a very good bond. So this is why investors like TCA are smart money. It's a very simple template, a very clear framework for making sure that the entrepreneurs know how to manage their risk, will help them in their business, help them grow their business, and prevent debacles. From the investor side, it's a similar situation. You want to be able to know beforehand what risks are, so you can actually help the entrepreneur do a good job in building the business, and therefore creating a great return on investment.
So I want to comment on this for a second.
Questions?
First of all, this is a very strategic way of thinking. I ordinarily like to score my risks so that I can get an idea about which risks are more important than other risks. What you're doing is strategically to say, here is how I might reduce that risk. So you're thinking beyond the present. You're thinking into how to manage the future. I like the technique a lot.
It's a simple technique. It's not, it's mathematical, but not necessarily by using a scalpel. It's more like just getting the dialogue going, which is really critical. And I think that dialogue alone is worth all the money in doing this, my opinion. So that's my whole spiel in a nutshell. You want to conclude it and say the final words?
Well, that was well done. Yeah. And again, in a future issue of Crossroads, we're going to talk about risk reduction. We are going to speak about how angel investors look at that and different methods in which they score it. But what you just did was to go way beyond that and to have a discussion with the entrepreneur, if that's what it takes, or among the investors, about how the present plan is not necessarily the final plan, and that there is a broader opportunity than maybe the entrepreneur sees. And there's the added value that you mentioned about having good angel investors who have seen this movie before coming into a company and kind of helping to shape some of the things the entrepreneur hasn't been able to see.
Well, it's always a pleasure to share information. This is a passion that both you and I share, in helping the entrepreneurial community as well as the investors. I really appreciate having the opportunity, which is kind of a surprise, to actually be the subject matter person on this one. I like kind of being the host part and asking the questions, but it's great to see you. We'll have another episode. For all those viewers out there, share, like, subscribe, look at us on Spotify, on Apple, and also check out YouTube. And you have the final word, Dave, and then I'll cut.
It was a pleasure putting you on the spot for a change, David. We'll do that again sometime.
And for all of us at TCA Venture Group, have a great day. Be successful in your business. Be successful in your investments.
Okay, first thing is that was good.